Hi everyone, this is Yash, the founder of the Alt Investors. In this video, we are going to discuss asset leasing as an investment opportunity for you. We'll specifically cover the direct leasing model offered by TapInvest by going through a sample deal by DrinkPrime. We will also cover the taxation benefits under Section 4480, which is the presumptive income for this model. Om and I will discuss the good and bad from our perspective and finally share our opinion. Do stay tuned for the whole video to gain maximum insights. Thank you. Hey, welcome back to the show for episode 2. How's it going?
Going really good. Episode 2, I guess, but the third video on the channel. I think third or fourth
Yeah,
video.
no, I think it's a fourth video actually.
Fourth video, yeah.
But episode 2 in the educational series of reviewing products
Mhm.
and investment
Right.
vehicles and all that sort of. So today, of course, we are going to cover asset leasing. I guess let's start with what's asset leasing.
Mhm.
To put it simply, I would say that asset leasing is purchasing a particular asset and then renting that asset out to another counterparty. So, the example we are going to review today is one of the live deals of Drink Prime on the platform called TapInvest, which was known as Leafround before. So in that case, Drink Prime basically cannot finance the assets themselves. We buy that asset for them, water purifiers, and lease it out to Drink Prime. So that's what asset
Mhm.
leasing is. But Om, do you know why companies want to do asset leasing? Why do they want to enter in this transaction?
Mhm. So from I think what you have told me, I guess a company would prefer going for the leasing model if they don't just want to, use a bulk of their capital just to buy the machinery. As their working capital, the capital could be used for their working capital. Also, if they don't want the actual assets on their book, they can probably just lease it out for a certain period of time. But what I don't understand here is why they come to such platforms and lease the machinery when they could just go to your traditional financial institutions.
I think how this works is they already have certain lines of credit and working capital loans from banking institutions and NBFCs. So they
Mhm.
can't really tap into those kind of ways of financing again for a higher credit limit because bank has given them those loans based on their company profile and books and everything. And
Mhm.
another thing that banks wouldn't directly want to own the asset and then lease it out to the company. It's not a very traditional model as well. And in some cases, banks wouldn't even consider what they are purchasing as an asset. So let's say a water purifier, which
Mhm.
is manufactured by Drink Prime itself, might not be
Right.
considered as a viable asset for the bank because if a default happens, bank might not be able to sell it again
Mhm.
properly. It's not like a home or a car which has very traditional ways of or a
Mhm.
reselling market not happen. So if it's let's say a very untraditional kind of asset, uh, banks probably wouldn't want to take that risk, which is why I think so they come on these leasing platforms. And on the flip side, it gives a very good opportunity for investors like us, right?
Right.
We also
Yeah.
get to take part in the company as well, help it grow,
And
and
enjoy good IRRs,
yeah,
I guess.
yeah,
19% here.
yeah. So I mean, anywhere between 16 to 26% also we have seen in the industry is between normal and asset leasing deals. So
Right.
definitely. So, I
Makes
mean,
sense. Yeah.
what are the different methods of, let's say, doing asset leasing right now? What can you think of?
So I think so. Mainly, I think I've heard of three. So one is
Mhm.
the SDI route, which is LeaseX. I think Grip Invest is doing that. Another one is the direct leasing, which is I think the most simpler form of leasing. And lastly, one is the LLP SPV model where you pool the investors' money to buy maybe a larger asset than a water purifier, and the
Sure.
lease rental is split amongst the partners. These are the three that I am aware of. I don't know if there's a fourth one out there.
There is a fourth one which I have heard, and we have looked into it briefly. It's a leasing subleasing model which is being done by a company called DZ5.
I think
But
we discussed it. Yeah.
yeah, yeah. So, but it's a little bit confusing model, I would say. So
Mhm.
I'm not entirely sure how that works. We'll cover it sometime else. So I guess, Om, let's get into one of the direct leasing deals, which is the agenda for this video. I'll quickly share my screen and open up one of the deals on TapInvest.
That's visible.
Yeah.
Yeah.
Okay, so this is TapInvest after the rebranding. They have asset leasing deals. I think a couple of deals open, which is pretty cool. And if you see, most of the deals have returns of at least 18% IRR. Uh,
hmm
so let's go into the DrinkPrime deal. What are your, let's say, first impressions, Om, when you look at this page?
So I am a huge fan of UI and UX on websites. So I think this is one of the finer ones that I've seen. All the key information are there. The charges, the expected IR is mentioned. I think some of the highlights of the company is also there. So I can see that they are backed by Sequoia. So at least I can be sure, okay, the Drink Prime is actually backed by some good names. And I think all the key information is already mentioned.
I've seen this platform before. I think so. This is your first time actually. But one of the best things that I like about this particular platform is that they are very transparent in terms of their returns. They will clearly mention the IRR, the ROI, and the CAGR rate with each and
Right.
every deal, which I think so is extremely transparent.
Right.
And I think more and more platforms should adopt this kind of model where they show all the three metrics. Because although
And
people get attracted
they have
by
explained also the IRR and ROI, which I think many investors actually do not know that how IRR is a sort of a flawed metric to calculate the actual
yeah.
returns. So the per annum basis is what you will actually get.
As an investor, I think so. I'm very interested in this particular metric, which is
Really.
9.83% CAGR. And I think so. TapInvest has done a very good job here. So
Yeah.
if we go down onto the deal page, we have a couple of information about DrinkPrime. Looks like they have 71,000 plus subscribers. Uh, But I'm still confused. Okay, what's their model? So it says DrinkPrime offers subscription-based water purifiers at an affordable cost. Okay, so basically, I think the model is they lease the asset from us and then they give it in a subscription-based model to their subscribers
Right.
with the
And they
sending.
keep the spread, which becomes their revenue.
Yeah, so I mean, I think so. They charge based on consumption. They should have some sort of minimal charges, and whatever money they get from that is then paid back to us. So let's look at the
Okay.
fundamentals. Uh, Product offering is DrinkPrime provides smart water purifiers which are IoT enabled that require no upfront investment. This is all fine. Media mention is also fine. So the subscribers are growing at a CAGR of 4% month on month, which is a pretty good metric, I would say.
Mhm.
But this metric is a bit outdated, I think. The last data we have is at least a year back. Given the deal is coming right now, I think we should have
Right.
updated
So I
figures here.
think when they launched the deal for the first time, they must have
Yeah,
posted the data and they forgot to update it.
I think so. TapInvest should update it for sure. What other stuff do we have? So we have key metrics, which is financials again. So revenue has grown at a CAGR of 13% month on month. Wow. Uh, and the gross margins have also grown CAGR of 7% for the last 13 months.
Even for a startup, I think this growth is, I mean, ridiculous numbers.
It looks like they are EBITDA positive, which is very
And they are
good.
profitable. Yeah.
Yeah.
EBITDA
But
positive. Okay. Mhm.
but this metric is again from April 2023. We are almost in November right now. 6 months of data is missing, which might be very
Yeah.
important at this
Hope
stage.
it must have grown by the same percentage.
Yeah, of course. But good to have that data, I guess.
Mhm.
And so let's say if I have to buy a particular asset, say if I only want to do 10,000 rupees, I don't think I can do that. Please enter an amount greater than
Because
or
it's, I
equal
think, per
to.
unit basis. So you won't be able to, it has
So
to be in the multiple of the unit price.
so let's say I have to buy 25,000 rupees worth of, I want to invest 25,000 rupees.
Right.
So it's suggesting me two values, 24,910 or 25,271. So
Right.
let's say if I select
So it will,
24,910,
I think, round off to the nearest multiple of the unit. So
right?
to get that exact figure. Yeah.
Because I can see what unit will I be buying. So it's a purifier X2102301. Unit price is also given. IRR is also given. Can I, let's say, modify different types of units? So if I go to edit selection, I want to add this one as well, add this one as well. My value, I think so, accordingly changes. If I do view summary now,
Right.
oh, it takes me to the next page. Let's go back.
It's
7 to
interesting
4.
how you can actually modify the actual number of purifiers, which means that they have already subscribers who are willing to purchase this. It's just that they do not have the purifier at hand.
Maybe, or they will just buy it off you, and then whenever they get a subscriber, they'll just assign that asset to someone
Mhm.
else. I mean, it's the company's responsibility to pay, not the end subscriber's responsibility, I would say.
Oh, got it.
So I guess another thing to note is, tenure is 30 months. And before we look at the summary, let's also look at the documents section, I guess. So what are the important terms of this? So monthly rentals will be paid as per the payment schedule, can be downloaded from the documents page. Liabilities of repair and maintenance, theft and insurance lie with the lessee. Who's the lessee? I don't know what lessee means. Let me quickly
Let's see.
Google.
Yeah, I think they would have mentioned this in the agreement, but we have to check
Okay,
that.
let's quickly check. So lessee is a person who holds the lease of the property, a tenant. So I guess the company here, right?
Company, yeah, yeah. The person who
So
also lives, I think it's the company.
yeah, so liabilities of repair and maintenance, theft and insurance lie with the company. Okay. Yeah. Ownership of the asset lies with the investor, that is buyer of the asset. In case of termination of the lease, Leafround has the power of attorney to take physical possession of these assets and liquidate in the secondary market. Fine. And investment is not risk-free. Lease payments are subject to DrinkPrime making payments. Okay, fine. So let's quickly look at the documents as well. So we have company pitch deck, payout schedule, licensing contract, and agreement to sell. So let's look at the most important, which is licensing contract. So good thing is this is on stamp paper, I guess, for sure. Uh,
Yeah, so I think you have discussed in the previous video the importance of stamp paper. So it's good
uh,
to see that this agreement is on there.
so let's quickly understand that methodology as to who's the licensor and licensee quickly. So person listed in Annexure B will be referred to as the licensor, and the company who we are leasing to, Waterwala Labs Private Limited, which is DrinkPrime, will be considered as the licensee. Very confusing, licensor and licensee, but let's try and remember it.
Right.
That licensor
Mhm.
is the investor and licensee is the company.
So, Yash, can we just touch upon who is the owner of the asset and what are his rights and all?
Yeah. So let's quickly find that clause, definition, interpretation, licensing, I think so. Okay. So we should look at this last three, four lines here. It is understood by the parties that the title
Mhm.
and ownership of the asset continue to vest absolutely with the licensor. Licensor is the investor, and accordingly, the licensor, the investor, shall be responsible for maintenance, insurance, operating, and other cost of the asset. Now, this is contradictory to
Mhm.
what is being said here,
I
right?
think right. So, so they have mentioned before that the lessee, which we checked on Google, is the company.
Yeah.
They are liable for all the repair and maintenance. I mean, which is fine because it is not viable for in as us for an investor to look after maintenance of water purifiers.
Yeah. So I mean, to clarify, I had a conversation on this particular point with one of the co-founders of TapInvest, and she said that,
Mhm.
this point has just been added to make this agreement legally airtight, but the responsibility of maintenance,
Okay.
insurance, and all the operating costs still lie with the company who is taking the asset from you. We just wanted to highlight that as an
Mhm.
investor, it's your responsibility whether you're comfortable with this risk or not. Uh, I mean, if
Right.
the company can any day challenge
I
on this
I
point,
mean, what if there's something that goes
yeah.
wrong?
Yeah. So there is of course that risk, but you as an investor need to get comfortable with it.
Fair. Right. So I think we should get to the most important risk that is involved with this investing. What if the company on the other side stops paying me the lease rentals?
Mhm.
What then?
Fair. So uh, let's go to that clause. Okay, I think so. It's this clause. So in case of failure to comply with the clause 2.2, so let's quickly read 2.2 as well. In consideration of the licensor licensing the asset to the licensee. So I'll read it in a simple manner, I guess. in consideration of the investor licensing the asset to the company do and hereby agrees to pay the rental fees in a timely manner, subject to the applicable taxes and duties as set out in the Annexure A. So, this one says in case of failure to comply with the clause 2.2, the defaulting company shall be liable to pay a penalty of 0.1% per day of the purchase value at which the asset was purchased by the investor, in addition to the license fee that are due and payable. So, what's that annually right now? I mean, how much is that annually?
So it would make to about 36.5%. But the question is, if they're not able to pay the lease rental itself, I'm pretty sure they're going to default on the punishment as well. So what if they just didn't pay us the punishment and they are not able to pay that 36.5% and also the lease rentals? What then?
So I think so that's also covered here. In case the licensee fails to make the payment of the license fees and the damages within a period of 15 days, uh, the investor hereby authorizes TapInvest to and TapInvest hereby undertakes to take possession of the asset and liquidate such asset for a reasonable price. Now, reasonable price is very subjective, but I mean, I don't think they can really define it,
Mhm.
uh, either on its own or by availing the services of a
Yeah,
third party. The proceeds from such liquidation shall thereafter be remitted from TapInvest to the investor after deducting a facilitation fee of up to 10% of the asset liquidation value for such liquidation.
right. I think the 10% seems a bit
Yeah,
unfair
to very
because
honestly, yeah.
it if the company defaults, it means that there was a problem in the due diligence from the tap invest side. So I don't know why they are charging 10% for that.
I guess they will
Uh,
have to pay the external provider as well, something who will be helping with liquidating the assets. But yeah, I mean, it shouldn't be borne by the investor for sure.
Okay, so given that, I am the owner and, as they said, in case of a default, is it possible that at some point maybe the owner himself would have to take possession of the asset? Because if that is the case, who would pay the logistics and the storage fees and all that?
Fair question. I think, I mean, I wouldn't want the asset. I mean, in this case, it's a water purifier. But what if let's say, asset leased a auto rickshaw, like a EV auto rickshaw? I don't have a way to store the auto rickshaw, right? So, uh,
Right.
I think it's covered in cost, sorry, in section
Hmm.
2.5, cost pertaining to shipping and transportation of the asset shall be borne by the company licensee. Responsibility of any theft, third party
By the
claims,
company. Yeah.
damage or accident will be responsibility of the licensee, and the licensor will not be liable for any damage to or loss in respect of the asset. So, I mean, I don't think so.
That's,
Have to.
yeah, seems fair. I mean, the company which defaulted. Right. So we should now move on to what if the asset itself is damaged. So I think during storage or during transportation or during the general use, if the asset gets damaged, who is liable for it and who will be liable for the repairs also? Is there any insurance to cover us
I
from this?
think here on clause 2.1 itself, it's mentioned that, as the investor is responsible for the insurance. But like I mentioned, it's not, I mean, the co-founder said that it's not practical for the investor to get an insurance on the asset as well. They will never see the asset practically. So I think so it's the responsibility of the company itself to get insurance, and if there's any damage to the asset, they need to reimburse the investor. But it's not very crystal clear in this agreement, and
Mhm.
I think so. As potential investors, you should be aware of that risk as well.
I think logically, if we are paying the management fee and all, the facilitator should either take care of it or make sure that the company who is
Yeah,
leasing the assets should
agree.
take care of all this. Right. So I think now that we have covered all this, I think we should just proceed to the next topic, which is can we exit in the during the agreement before the maturity period? Can we sell off our units or
So
something like
because
that?
these are long-term tenure contracts, I am very cognizant of the fact that investors might appreciate some sort of liquidity, but I mean, I don't think so. It's practical,
True.
but let's see what the agreement says. So the termination clause says the licensor may terminate this agreement if the licensee breaches its obligations under the agreement, provided such breach is not cured or remedied within 15 days from
Hmm.
the date on which a written notice is given to the licensee. Uh, and so by the licensor means by the investor, and by the
Hmm.
licensee means by the company. Uh, I think so. We can only
Well
terminate this if
understood.
there is a significant breach of this contract that you're signing on stamp paper. Otherwise, I don't think there's any sort of liquidity mechanism or a
Right.
secondary sale of your existing contract.
Yeah. So I think we have to stick with the deal for
Uh,
the entire maturity period. The next, I think we have taxes. So from what I have heard, that direct leasing taxes are a very interesting and fun part. So why don't you just,
Taxation is indeed one of the best parts about direct leasing, and your post-tax returns can be higher as well if you
Mhm.
select different, options available to you under direct leasing. One is, profit. One is where you can file your income under profits and gains from business and profession. And the second provision that is allowed for you is the presumptive income provisions, which is under Section 4480 in the Income Tax Act. Uh,
Mhm.
if you, let's say, go via the normal provision, you can claim depreciation on the asset. Uh, I am not a chartered
Mhm.
accountant to recommend how much depreciation you can claim. I think I would
Right.
say go with a straight line
Mhm.
depreciation where whatever is your purchase value minus your resale value, divide that by the term of the lease. And whatever is the per month or per year cost, that's your
Right.
depreciation value. Uh, so let's say if you receive 50 lakh worth of
Mhm.
lease rentals, uh, if your expenses and depreciation is 35 lakhs, your total income is 15 lakhs. Assuming you are in the 30% slab, you will have to pay 4.5 lakhs as taxes under the normal tax provisions. Under the presumptive tax, which
Mhm.
is only allowed for certain cases and certain individuals. So if you're a normal resident Indian,
Right.
it will be allowed to you, but if you're investing via LLP or you are an NRI, it will not be applicable to you. So please read the 4480 tax provision, which again I'll mention in the description of this video. But if you file under that, you need to consider your income as total 6% of lease rentals you've received. So let's say 3 lakhs is your total income. On 3
Mhm.
lakhs, you'll have to pay a tax of 30%. So you'll only have to pay 90,000 rupees as your taxes. You see the very big difference
Right.
between your 4.5 lakh and 90,000, which can get you your post-tax IRR
Mhm.
much higher. And I think so that's the point TapInvest is also trying to bank on. If you can claim presumptive income, and if your CA allows or agrees with you, go for it so that your post-tax returns are much higher as compared to other different models of the LLP and SDIs out there.
Correct. Correct. Yeah. So yeah, the only thing to note is that presumptive taxation can only be enjoyed by certain professionals. So you may have to check with your CA. There's some limit as to if the income
Yeah.
is above 50 lakhs, or if you're not a small business, you may not be able to get the benefit of it. Yeah.
Then let's quickly go to the. I mean, everything else looks pretty normal to me. Indemnity, miscellaneous. Let's quickly go
Mhm.
to the end of the agreement, which is Annexure A. Uh, which tells, okay, the
Yeah. Right.
licensee shall pay license fees to the licensor in the following manner. This licensee licensor thing is very confusing, honestly. Uh, but so
Right.
licensee is the company, licensor is the investor. So the investor shall pay monthly license fees to the investor. Then what they're saying is that the company shall commence making payment of monthly license fees from the 10th of the license start month, which is also fine. Now let's also come to the management fees and the processing fees. For the asset purchase value as shown in Annexure
Mhm.
B, the licensee, which is the company, will be charged a processing fee of 1% of the total asset value plus 18% on that 1%. So that's fine. That's for the company. This is the,
Mhm.
I think so, bank account
Yeah.
details. And the service provider, which is TapInvest here, shall deduct a
Mhm.
3.1%
TapInvest. Yeah.
management fee plus 18% GS on that 3.1% out of the monthly license fees paid by the licensee in lieu of the providing the license management services. So I guess, I mean, if I go back
Mhm.
to, yeah,
Right. Even though it's Yeah, so even though the licensee is actually the one who's paying, but it's out of our income only. So the monthly income that we were receiving,
But I think
the
so. This
fees will be cut from that.
19.01% that you have here is post all the charges as well. Although it's not
Post,
clearly
yeah.
mentioned, but I
Mm.
think so that should be the case.
So you can just go in the summary as well. Even there, they haven't mentioned anything, which means that this is most likely
Post op, yeah,
the
post all the
post
charges. Yeah.
operating and management fees. Yeah,
Yeah, so this summary page is also pretty helpful. Your lease start date will be 1st of November. Your end date will be this 31 months. This is the monthly rental
mm.
that will be paid out. And then there is a buyback value.
Value is this buyback value negotiable by any chance? Can we negotiate the
I
resale
don't
value?
think so. So let's quickly go back to the documents section. There is an agreement to sell that you have to mandatorily sign while entering into this leasing deal.
Hmm.
I think what this agreement to sell uh, tells you is at the end of the agreement, you will have to mandatorily give your ownership of the asset to TapInvest, who's the facilitator of this whole transaction,
Mm.
at a fixed price, which TapInvest has already
Okay,
decided here in the buyback value section, buyback value. So you can't
right.
negotiate it.
So I guess even if the market price is higher, the tap invest can simply just keep the rest
I
of
guess
it
that's how they
in
make
their own
money.
pocket.
So yeah, that's the case here. So, but yeah, I mean, would recommend all investors to read this agreement as well. It's a standard agreement to sell, nothing out of the ordinary here.
So I think we have covered everything here. So now we can just move to the advantages and disadvantages and wrap this up with our own personal opinion whether we would invest in this deal or not. So if you could go to the our blog where we have
Yeah.
mentioned all the
So I
details.
think so. One of the benefits of direct leasing is, if you can claim in your
Hmm.
income under the Section 4480, your post-tax returns will be much more superior under all the different asset leasing models available. The second thing is this is a little bit safer than other instruments out there, unregulated instruments, because there is a hard asset in the background. If you are purchasing water purifiers and if the company defaults, TapInvest will also help you sell that agreement and give you some value after deducting 10% charges and all that sort of stuff. So at least there's some sort of asset-based
Right.
safety in the background. Uh, on the
Hmm.
disadvantage side, like we discussed literally 2 minutes back, is you don't have the flexibility on selling back the asset. What if you don't want to sell the asset to TapInvest? But they will make you mandatorily sign that agreement,
Hmm.
otherwise you can't enter into that deal. What if you want to keep the water purifier for yourself? You can't
Right.
do that. If Section 4480 does
Hmm.
not apply to you, it's not really beneficial for you to get into direct leasing. You might be end up paying much more tax
Right.
than the actual other models out there because you can't claim very high depreciation or something most of the times. And in the off chance that even let's say you have financed a big asset like a rickshaw or a car, and Tap Invest is also not able to sell that asset, will uh, the responsibility come on you to store the asset? Uh, I don't know. It's not clearly mentioned, but it's a risk that you should be aware of. And
Right.
this, along with other different types
Hmm.
of, regular asset leasing risks, are of course out there. Don't get swayed by the high IRR numbers. Of course, TapInvest does a very good job in mentioning the ROI and the CAGR as well. But make that calculation on a spreadsheet.
So Yash, so I just wanted to ask you, do you think you would invest in this deal by any chance? I mean,
I
what's
mean, I
what's
would
your personal
definitely,
opinion?
I think, give it a shot. It's a new category. Right now, I'm an
Mhm.
NRI, so I can't claim Section 4480.
Gotcha.
So I'm waiting
Mhm.
for my return back to India, and then once I become a resident Indian, I'll start investing in these deals as well. But
Right.
I think so. If there are I think so one or two
Mhm.
reasons more. If let's say you love cash flows as an investor, I like cash flows. It helps me meet my monthly
Mhm.
needs, whatever I want to, and then rest of all the capital is invested. So if you like cash flows, uh, you can invest in these deals. I think so.
Mhm.
Leafround also gives out this payout schedule under the documents page. If, for example, I was
Mhm.
financing 8 water purifiers, my upfront cost is this, my resale value is this, my monthly rental is this. So, this 1,000 rupees can be kept as movie budget or something like that, if I want to. And and if I
Right.
can claim this under Section 44 OD, then yes, definitely, because my post-tax income will be much more superior than other traditional investment options as well available to me. So
Yeah, fair enough. So I personally, for me, more of a equity guy. So I would probably, I'm not a huge fan of cash flows, but yes, I think consistent cash flow is necessary. But one of the main things that I would look is the company that
yeah,
is on the other end of this deal. So if in this case, the DrinkPrime, they are backed by Sequoia, as I said. So I mean, I am confident that the company will be able to pay my lease rental and won't be default and in some off case. So I would probably look at all the factors that are there, which is the company on the other and all the other points in the agreement. And yeah, I mean, it looks like an attractive deal. See it.
and I think so. This completes our video here. We have tried to give out all the information. If you have any other questions, please do mention it in the comments below. And please support this channel by liking,
Yes.
sharing, and subscribing this, uh, so that we can bring in more people on
Yeah,
the show as well, and we can do more sessions like these to make you aware of all different kinds of investment options available. Thank you so much for watching, uh, and see you next time.
correct.
Thank you.
Mhm.